Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So I have the slide here from the ISC website that pretty much describes how to take advantage of if you're a bull, if you're a complete bear, or if you're neutral. And of course, as we bounce here, if you're a complete bear or if you're neutral. And of course, as we bounce here recently, probably buying call options is the best way to participate if you're bullish. If you're neutral, you could also sell puts, which is exactly a strategy that our proactive investor program is actually doing right now. And I'll talk about that when I get to the slides in a little bit. If you're a little bit neutral, you can also do bull spreads, bear spreads. And once we get back into the areas where we're going to run into some pretty stiff price resistance go up ahead, then you can switch up to being bearish and you can buy puts. You can also do spreads at that time. You can sell calls. There's all kinds of things that you can do once we reach the areas of resistance, which are coming up ahead. And this slide here pretty much describes, once again, all the different strategies from mildly bullish, using bull call spreads, bull put spreads. If you're mildly bearish, you can also use bear call spreads, bear put spreads. And if you're neutral, you can do long call spreads, long time puts, time spreads, butterflies. So this slide is great for you to figure out which one of the strategies you want to use, depending, again, on your opinion of what you think the market is going to do. So I'm going to start here by talking about where we were at the beginning of May, and just kind of a couple of different strategies depending on if you were long at the beginning of May. If you were already long from shares anywhere from below here, if you had bought anywhere during this bull market, what I like to tell people to do, something to think about, is as the market is rallying up into the price resistance that we were rallying up to on the SPY near 140, I have several areas of support below current price. The first area of support would probably be a great place for you while the market is rallying and while your price is low and while the cost of the insurance is going to be extremely inexpensive to where you can buy quite a bit of time. You would buy a protective put below that area. And if you want to finance that purchase and you have the shares, then you could use a collar strategy to where you could sell the upside calls and take the money that you collect from selling the upside calls and invest it in that protective put below that first area of support. Now, that's what I call buying insurance when the house is not on fire. So in other words, doing that kind of strategy is going to work out the best when the volatility is in your favor. Volatility is always going to be low for your put options on some kind of a rally into some kind of price resistance. And of course, the calls that you're going to sell above this price resistance are going to be very expensive. So by the end of that week, when I did the option seminar for the currencies for the ISE, we had already started to sell off, and we had just begun the beginning of this little topping phase. And as you can see here, I've got a candle marked off that says May 7th, and that's exactly where we began the sideways stage 3 topping process, followed by the break to the downside and the beginning of the bear market phase. So our Proactive Investor Group is actually selling the 110 puts right here below this support area. This is one of the strategies that they're doing. Again, not interested really in acquiring the shares unless they have to have it put to us. We're mildly bullish. We're in support, so therefore we should be looking for some kind of a strategy to where we can collect premium. And this 110 area of support is the next area where we have some kind of price support and a place to put a stop loss if we're wrong. So they're selling those puts, and they've been selling them for the last few weeks and months. And I think they just rolled over last week from their August into their Septembers. Okay. You can also, if you're bullish, we're coming up at the very, very top of this range. If you're bullish, you can actually take a breakout to the upside by buying upside calls, taking the money that you collect from selling those puts, and going ahead and buying those calls pretty much for what we like to call our breakout for free strategy. Once we get up into these areas closer to 130 now, we're going to have some price resistance, and that would be an opportunity for you to turn bearish. Once again, either selling the upside calls, buying puts to participate in any kind of a retracement. It would be nice if the market wants to trade in a big range between 110 and 130 on the SPY. And you can always take advantage of that with a couple of different option strategies. At the same time that the S&P was coming into that resistance, the ISE Euro FX, which is the dollar versus the euro, was coming into some major support. And by the end of that week, we had a pretty big reversal at that point in time, which once again, everybody was pretty bearish on the dollar and pretty bullish on the stock market. And that's usually when the market, especially when it comes into an area where demand exceeds supply. On our price charts, this is what we teach our students to look for. And of course, now, in the last couple of months, we've pretty much gone sideways here. Because everybody is pretty bearish on all the currencies. So if the market continues to sell off, see the dollar start to rally once again, testing the resistance areas near 72, 78, and 82 finally, if it does happen to rally. And if it takes out the support area below, around 65 or so, then there's another support area closer to 64. So at this point, it all depends on if the market wants to rally, and of course people want to they're expecting QE3, so they're pretty bearish on the dollar. So we're looking at the XLE, which is the Energy Exchange Traded Fund. It is defensive, but it also has had a pretty big sell-off, and it's come down into this area of support just below 65. I'm pretty sure that if I look at my live charts right now, it's probably testing that area of resistance a little bit higher up, and maybe a breakout opportunity above that 71 area. And of course, a lot of that depends on what happens on that jobs report tomorrow. But I would be more comfortable actually buying in the support that we're at right now, in the money or at the money calls in the support. But if you want to participate, if it doesn't come back down and test the support again, if you want to participate in any kind of an upside move in that particular exchange traded fund, you probably want to look to buy some calls on a breakout above that 70 area. And just a real quick second here, it looks like we're very, very close to the top. As a matter of fact, today's high was right on that line. So there's still an opportunity for a breakout above that 70 area to participate in some kind of upside in the energies. The financials, this is actually one of these exchange traded funds where it's so close to support, it may be a good time to accumulate the shares. If you want to hold this as some kind of asset allocation play to where you're not really that bullish on it, but of course you're buying the very, very inexpensive exchange traded funds from the Select Spider Group and holding them and, you know, rotating out of some of the more expensive ones into this kind of thing, you could probably pick them up if they happen to come back down and test this area of support close to 11. I checked the premiums to try to actually sell the puts, and the premiums are very, very low unless you go a long way out. Okay, so maybe buying the shares would be a better way to go. On this particular one, the materials exchange traded fund, again, very, very strong, solid support areas, at least two of them below current price. a little bit closer to 35. And so that one, as I look at the live chart right here, has broken out of the top of that channel on this rally that we've had this week. So we have a non-farm payroll report coming out on Friday. If you want to wait until you see where the week settles out, if it happens to break out of that channel and you want to be bullish, you could possibly pick that exchange-traded fund up. And, of course, your target would be the area of resistance that's a little bit closer to the 40 area. Okay? And that is XLB. The next one we have here is the industrials. And that one, of course, has a very, very solid area of support around 30. And we were very close to the top of that little channel on XLI. And it looks like, as I'm looking at the live chart, we have also broken out of the top of that channel. We've just crossed above the 200 moving average. There will be a lot of people bullish on that exchange-traded fund because it has regained the 200-day moving average. A lot of people look at that. But notice I have a 10, a 30, and 200 on these charts, folks. You'll notice your 10 and your 30 are both sloping down, and your 200-day moving average is flat. The only reason I would be bullish at all on any of these is because they have come down to some significant support. They've had some pretty solid pullbacks, and so it could be a nice buying opportunity. But you also may get an opportunity if the market continues to flop around here. If breakouts fail, you may get an opportunity to buy a pullback to that support. And this particular one, the XLK, which is the technologies, it should have had a pretty decent day. It's right at the top of that channel that you see up here where that 24.59 line is at that 10-week moving average. It is above the 200 moving average, which is still considered to be rising and therefore bullish. So that area of resistance that's coming up here at 26 isn't that far away. So taking a breakout up to that resistance area doesn't really give you very much upside. So if you're going to do that, you may want to buy enough time for that to possibly happen because it could take several weeks. We could have some backing and filling, especially if we have another non-farm payroll that disappoints. Your XLV, your healthcare, because everybody happens to be very, very bearish at this point in time, that one broke out strongly. It's strongly above there, and it's almost into the resistance. So I'm actually more likely to go looking to buy puts on that one once it gets up into this resistance area a little bit higher up, closer to 35. And your XLY, your consumer discretionary here, look at the chart right now. Again, it also has broken out above there. And that one I actually set up on the next slide a couple of trading ideas. Buy calls if bullish on a break above the resistance. You could buy the straddle. I would not really be that interested in going short into the support area down here, which is close to 34. I would be more likely to go long at the 34 area and possibly switch up to going short up at the 40 area. And through the home builders on here, folks, and this one actually had some good news this week. We actually had a few new homes that got sold that came in better than expected. So this one kind of has some room to the upside above 1550 to the 20 area. So if you're looking for something, again, that's pretty beaten down, definitely going sideways for many, many months and years here, might be an opportunity to pick up a low-cost exchange-traded fund. And there's your gold. And all I can say about that is, wow. Just be careful if you're interested in buying gold up here. Prices are pretty high. So if you are interested in buying gold up here, make sure you've got to stop below that 10-week moving average because it's pretty far until we drop down to the 30-week moving average. Some of the sources we have on the Online Trading Academy website, we have a financial education center, and we also have some exchange-traded fund webinars, which you can see for free on our website if you register. We do have our proactive investor classes and extended learning program, and our curriculum for that class actually covers everything, the basics of financial planning, thing that we should have learned in college. Unfortunately, not too many colleges offer. So it goes all the way through the basic strategies into what sectors are, into what capitalization is, evaluating your investment profile, market timing, covers pretty much every asset available, goes into estate planning, annuities, portfolio construction. Then it moves into the 12-week proactive investor curriculum to where they actually execute strategies based on where we are in the market cycle and taking advantage of volatility either as a buyer or a seller. And I do have this program available for you here. If you want to send an email to smisic@tradingacademy.com, I'll give you all these websites that I did my research on, and hopefully that'll help you. And I know we're getting the top or the bottom of the hour here, so it's time to wrap it up. Here's some ISE website resources for you, including some ETF traders alerts if you want to sign up for that, and recordings of the podcasts that they've done, and recordings of the webinars that they've done. Okay. And so with that, I probably don't have very much time for questions, and sorry I went a little bit over here, but I just wanted to give you a basic layout of sector rotation. I'd be happy to come back and do some more detailed, maybe pick some alternatives to the sectors, but good place for you to get started, folks, for the next market cycle. It'll be here before you know it. So with that, my email address is smisic@tradingacademy.com. So see if I can actually type it in here with my one finger. Okay. Katrina, if you want to take it over.
Sure thing. All right. Thanks, Steve, for sharing your insights with us today. I know everyone thought this session was very helpful. Thanks to all of you for joining us. A recording will be available in a few days on isc.com/archives for those of you who missed part of the presentation or would just like to review it. If you do want to learn more about ETFs that we discussed today, make sure to visit isc.com/ETF. You'll find more product info, articles, and a link to sign up for free trade alerts. These are great for new investors and people who are unfamiliar with our products, and they're a valuable free tool that we offer to our webinar attendees. We do have a lot of resources available as well if you're looking to trade products based on these industries and sectors, so make sure to check it out and take advantage. If you have any comments or questions for us, make sure to send an email to webinars@isc.com. Thanks again to Steve, and we hope to see all of you back next week. Thanks.
Thanks again, folks. Have a great day.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.